All right, fam. Let's talk about CPI data, inflation, as well as the rate cuts coming out next week. Are you guys ready for this one? Strap in. It's going to be a good one. Let's touch base on what Tom Lee was talking about, which is the inflation falling like a rock, which is pretty much what he said multiple times. But what I'm going to tell you guys is that inflation is definitely better than we were led to believe. The markets are manipulated. I've told you guys this a bunch of times. It dipped on August 1st, and then later on in August, it dipped again. And the last couple of weeks have been pretty rough, to say the least. But I told you guys, when you see red, buy. When you see green and the prices are going up, start taking profit. Don't let them shake you out of your stocks. I've explained this to you, and look what happened today. Inflation data came back. Exactly like I told you guys. We don't have a lot of inflation going on right now. The average inflation over the last 16 years is 3.2%. Now, granted, we've been slightly above that at times, and it's been pretty rough trying to get to 3.2%. But right now, we're at 2.5%. Which is really good. Now, inflation in July was 2.9%. So we are definitely improving, and it's a big improvement. So right now we're looking at a 25 basis point rate cut next week. We're kind of out of the possibility of getting a 50-point rate cut, but that does not mean that's not going to happen going forward at some point, just like the markets are going to be kind of volatile. And I'm not really concerned with price fluctuation short term, like over the next few weeks leading into the election. Now, the markets could go up a little more, go down a little more, but I'm not really concerned with too much of the short-term price action between now and the election, and more specifically in September and October, but more of the long-term, mid to long-term, like New Year's, Christmas time. December is going to be really good, closing out the year very strong. But let's go ahead. I'm going to read you guys this report and some data on CPI, inflation, as well as the consumer price index, as well as consumer spending. So let's go ahead. I'm going to read you guys some data on CPI, consumer spending, and of course the rate cuts. Core consumer prices in August rose 3.2% year over year, unchanged from July and well above the Fed's 2% price target. U.S. MBA mortgage applications rose 1.4% in the week ending September 6th, with the purchase mortgage sub-index up 1.8% and the refinancing mortgage sub-index up 0.9%. The average 30-year fixed rate mortgage fell 14 basis points to a 19-month low of 6.29%, and that's fallen from 6.43% in the prior week. This is pretty good. U.S. August CPI eased to 2.5%, which is inflation year over year, from 2.9% in July, right on expectations, and the smallest increase in 3.5 years. The U.S. CPI index eased to 2.5% year over year from July's 2.9%, right on expectations, and the smallest increase in 3.5 years. However, August CPI ex-food and energy was unchanged from July at 3.2%, which is right on the expectation. So things are looking really good as far as inflation. We are nowhere near where we were in 2008, not even close, and we're significantly better than we were a few years ago. Inflation is definitely falling like a rock, just like Tom Lee said. The stock market is going to do very well by the end of the year, and right now everything is up. Nvidia is back up to 119, AMD is up to 150, and there's a lot of stocks that have recovered greatly today alone based off of this data. The markets have kind of overreacted, and they overly priced in negativity, which I don't really believe this as being a coincidence. This is a manipulation. They do this all the time to shake you out of your stocks. This is what they do. So guys, understanding the psychology of the market, just like I'm talking about right now, having your emotions in check is a very big, critical part of investing and trading. It's very hard to be profitable, even if you're knowledgeable and have good amounts of cash in your portfolio, if you can't get your emotions in check. This is one of the big fundamentals that I teach. If you guys are interested in achieving financial freedom and ultimately the financial health and wealth that you deserve, I offer a full training course, Discord, to surround yourself with like-minded people just like us, as well as full one-on-one coaching to help you guys achieve your goals and dreams. It's a very serious mentorship though, so if you take your financial freedom very seriously and you are committed, there's very limited spots, but I would love to help you grow your portfolio. Understanding the psychology of the market is exactly how I turned $26,000 into $2.2 million in the last 6.5 years. This is something you you want for yourself, I would love to help you. I'm driven every single day to help people just like you achieve their goals, just like my students. Every student I have in my Discord right now is all up in profit compared to when they joined. Some are up 10 to 20% their first month. Others are up 10 to 15% their first month. And I have some students that have made over 150% in the last 2 to 3 months. If this sounds like something you are interested in, I would love to help you, but you have to be very dedicated to growing your financial freedom. You guys can sign up at investwithcorey.com right there on the screen, or the link is in the information box below. You see, guys, a good inflation rate is really 2%. The average has been 3.2% over the last 16 years, and we've been sitting just above 3.2. We recently in July fell to 2.9, and now for August, which is the report that came out yesterday, we have fallen down to 2.5%. We are now getting closer to that 2% target. If things keep going the way they're going right now, by Christmas time, we'll be pretty close to, if not at 2%. So interest rates are getting cut this month, and things are looking really good and strong for the markets. Also, on Wednesday, the Labor Department showed that consumer prices did rise 2.5% in August from a year earlier, which is down from 2.9% in July. So the consumer prices are actually working their way down. Today's report will add to confidence within the Fed that inflation is indeed on a sustainable path towards 2%, the Fed's target level. For months, cooling inflation has provided gradual relief to American consumers who were stung by the price surges that erupted 3 years ago, particularly for food, gas, rent, and other necessities. Inflation peaked in the mid-2022 at 9.1%, the highest rate in 4 decades. Now we went from 9.1%, we're down to 2.5%. So things are very strong right now compared to where they were in 2022, and we're almost back to a stellar point of inflation, or at least where we should be at 2%. Another thing to note is that American paychecks have risen steadily for the past 3 years. Overall incomes have even outpaced inflation for roughly the past 18 months, helping more households handle elevated prices. On Tuesday, the Census Bureau reported that the median inflation-adjusted household income rose 4% last year to above $80,000, essentially matching the 2019 peak. This is before the pandemic. This is really good. Just as a reference, inflation reached 14% in 1980, which is a lot higher than the 9.1% in 2022. We are now at 2.5%. So let that sink in. We are in a very strong position right now. There's no need to fear the markets. This is all just trying to shake you out of your stocks, make you sell, incite fear, volatility. Don't buy into it. Buy into good companies that you believe in long term, 6 months to a year. If you're trading, trade good companies. Do not let them shake you out of your stocks. Don't let them confuse you blindly with all of this irrational fear. We have a very strong economy right now, and inflation is dropping heavily. We're at 2.5%. Rate cuts are on the horizon, and we're going to have some steady basis points being cut from the interest rates over the next 6 months to a year. The economy will get stronger, but it will take time to fully recover. But most importantly, it will take some time for the confidence to build. By Christmas, New Year's, spring, confidence will build. Next summer, we should be very, very solid financially in this country as far as inflation and economy goes, because we're pretty much already there now. It's only going to get better by next summer, and confidence is a really big part of that. So look, if you guys are worried about inflation, I wouldn't. It's dropped. It's good. Rate cuts are coming. The market's doing well. Nvidia has also jumped. I got another video coming out on that, and AMD as well. And the tech sector is starting to boom yet again because of some new information that came out there, and I will have a video on that as well. But I'm just letting you guys know not to worry. The markets are going to do well. We're all going to do well. Don't be hasty. Buy on red. Buy the dip dollar cost average. Sell puts and sell when you see lots of green and big green candles and the price is surging up. That's where you start taking profits. Understand this sentiment. You'll do well in the market. I teach this to all of my students, and every student I have right now is in the green before the market even went up. They're all profiting between 10 and 15% in their first month and second month. And I have lots of students that are up 20 to 30%, and even have some that are up 100 to 200%. If you guys want to sign up and join my inner circle, I offer full Discord, training course, one-on-one coaching, to very serious mentorship. Limited spots are available. You have to take it very seriously and be committed to your financial success. This way I can help you. You guys can sign up at investcorey.com right there on the screen, or the link is in the information box below. I'm driven every single day to help you achieve your financial goals. Look, guys, I've said it many times in this video. Now is a buying opportunity. Buy the dip on any stock, sell put puts, get into your positions, and build your portfolio. The market is strong. I would not fear it. You guys, I will see you on the next one. Take care of yourselves.